You know what keeps me up at night? It's not the headlines. It's not the talking heads on financial television telling you everything's fine. It's the silence, the deafening silence from the people who should be screaming from the rooftops about what's happening right now in the precious metals markets. Because while you're going about your day, while you're checking your 401k and hoping your stocks recover, while you're trusting that the system will protect your wealth, something extraordinary is unfolding. And the people who understand what's coming aren't talking about it. They're acting on it. Let me paint you a picture. Right now, as I'm recording this, gold has surged over 60% in a single year. Silver has exploded 128% in the same period. These aren't normal moves. These aren't the kind of gains you see in stable, healthy markets. These are the kinds of moves you see when something fundamental is breaking. And here's what nobody's telling you. This isn't the top. This is the beginning. I want you to think about something for a moment. When was the last time you saw gold and silver move like this? When was the last time precious metals dominated the financial conversation? For most people, the answer is never. Because most people weren't paying attention in 1980 when gold hit $850 an ounce and silver briefly touched $50. They weren't watching in 2011 when gold peaked near $1,300. But here's what's different this time. In 1980, we had inflation. In 2011, we had a financial crisis hangover. Today, we have both. Plus a few other ingredients that make this situation unlike anything we've seen in modern financial history. Let me tell you about a conversation I had recently with a portfolio manager who's been in this business for 35 years. This is someone who's seen every market cycle, every crash, every recovery. And he told me something that stuck with me. He said, "I've never seen institutional behavior like this. Never. The smart money isn't just buying gold. They're hoarding it like it's the last lifeboat on the Titanic." Think about that image for a second. The last lifeboat on the Titanic. Now you might be thinking, okay, but gold's already up 60%. Haven't I missed it? And that's exactly what they want you to think. That's the narrative that keeps retail investors on the sidelines while institutions accumulate. Because here's the truth. When JP Morgan says gold could hit $5,400 by 2027, they're not making that forecast for fun. They're telling you where they think this is going because they're already positioned for it. Let me break down what's actually happening right now, because the mainstream financial media is either missing it or deliberately ignoring it. First, let's talk about central banks. Not the Federal Reserve, not the European Central Bank. I'm talking about central banks in China, Russia, India, Turkey, Poland. Countries that are systematically, methodically, relentlessly buying gold at a pace we've never seen before. In the past 2 years, central bank gold purchases have shattered every record. We're talking about hundreds of tons of gold being pulled out of the market every single quarter. Why? Why are these countries suddenly so desperate to own physical gold? Because they see what's coming. They understand that the dollar's role as the world's reserve currency is under assault. Not from conspiracy theorists, not from gold bugs, from mathematics. From the simple, undeniable reality that you cannot print trillions of dollars without consequences. Here's a story that illustrates this perfectly. A few months ago, a major European pension fund made headlines by allocating 15% of their portfolio to gold. 15%. For a conservative pension fund, that's enormous. But here's the part that didn't make headlines. They tried to buy physical gold, not paper gold, not gold ETFs, physical bars. And you know what happened? They couldn't get it all. The premium they had to pay over spot price was astronomical because there simply wasn't enough physical gold available at that scale. That's not a supply glut. That's a supply crisis. And it's not just gold. Silver's story is even more compelling, even more urgent. Because silver isn't just money. It's not just a store of value. Silver is the most critical industrial metal of the modern age. Every solar panel requires silver. Every electric vehicle requires silver. Every smartphone, every computer, every piece of modern technology requires silver, and we're running out. I don't mean we're running out in some distant future. I mean right now, today, the above-ground supply of silver is at historic lows. The silver that's available for investment, for industrial use, for jewelry, for everything, is disappearing at a rate that should terrify anyone paying attention. Here's why this matters to you. Here's why this isn't just some abstract market dynamic. Because while silver is disappearing, demand is exploding. The green energy transition alone is going to require more silver than currently exists in available stockpiles. Add in the investment demand, the industrial demand from traditional sectors, and you have a mathematical impossibility. Something has to give. And when it does, the price adjustment is going to be violent. Let me tell you about what happened in the silver market back in 2011. Silver went from $18 an ounce to $50 an ounce in less than 6 months. It nearly tripled in half a year. And that was without the supply constraints we're facing today. That was without the industrial demand we're seeing today. That was without central banks buying gold at record pace and creating a halo effect for silver. Imagine what happens when those conditions align. Now, I know what some of you are thinking. This sounds too good to be true. If this is such a sure thing, why isn't everyone doing it? And that's a fair question. It deserves a real answer. The truth is, most people are trapped in a system that doesn't want them to own gold and silver. Think about your 401k. Think about your IRA. What are your options? Stocks, bonds, maybe some mutual funds. The system is designed to keep your money in paper assets, in digital promises, in things that can be created with a keystroke. Quick aside here, because this is important. If you're sitting on $100,000 or more in retirement accounts, there's actually a way to get physical gold into your IRA without tax penalties. I put together a free guide that explains exactly how gold IRAs work. It's in the description below. Worth checking out if you want to protect your retirement with real assets instead of paper promises. Anyway, back to why most people aren't stacking yet. The financial industry makes money when you trade stocks. They make money when you buy mutual funds. They make money when you stay in the system. But when you buy physical gold and silver and put it in a safe, they make nothing. Zero. That's why your financial advisor isn't calling you right now telling you to back up the truck and load up on precious metals. It's not because it's a bad idea. It's because it's a bad idea for them. Let me share something that happened recently that perfectly illustrates the disconnect between what's happening in the real world and what you're being told. A major investment bank, one of the biggest names in finance, released a report saying gold was overvalued and due for a correction. This was about 3 months ago. Gold was trading around $2,800 at the time. You know what that same bank was doing while they were publishing that report? They were buying gold. Massive amounts of gold. For their own accounts. For their wealthy clients. They were telling retail investors to stay away while they were backing up the truck. That's not a conspiracy theory. That's public record. You can look up their holdings. You can see exactly what they were doing while they were telling you to do the opposite. This is the game. This is how it works. The institutions accumulate while retail investors wait for permission. And by the time the mainstream media finally admits that gold and silver are in a bull market, by the time your neighbor is talking about it at the barbecue, the easy money has already been made. But here's the thing. We're not at that stage yet. We're still early. I know it doesn't feel early when gold is making new all-time highs every other week. I know it doesn't feel early when silver has already doubled. But compared to where this is going, compared to what happens when the real crisis hits, we're still in the first inning. Let me explain why I'm so confident about that. The gold-to-silver ratio right now is completely out of whack with historical norms. Throughout most of human history, the ratio has been somewhere between 15:1 and 30:1, meaning it took 15 to 30 ounces of silver to buy 1 ounce of gold. Right now, even after silver's massive run, the ratio is still elevated, which means either gold is going to come down or silver is going to catch up. Given everything we know about central bank buying, about supply constraints, about the dollar's trajectory, which scenario seems more likely? Silver catching up isn't just probable, it's inevitable. And when it happens, when silver starts moving the way it moved in 2011 but with even more force behind it, the people who positioned themselves beforehand are going to experience wealth creation on a scale that most people can't even imagine. I'm not talking about getting rich quick. I'm not talking about some get-rich scheme. I'm talking about preserving your wealth and potentially multiplying it while the paper assets that most people are holding evaporate in value. Because here's what's really happening. The thing that nobody wants to say out loud. We're watching the slow-motion collapse of the dollar's purchasing power. It's not dramatic. It's not sudden. It's death by 1,000 cuts. Every month, your dollars buy less. Every year, your savings are worth less. The number in your bank account might stay the same, but what that number represents, what it can actually purchase, is shrinking. Gold and silver don't have that problem. An ounce of gold today is the same ounce of gold it was 100 years ago. It doesn't degrade. It doesn't lose its properties. It doesn't depend on anyone's promise or anyone's guarantee. It just is. That's why central banks own it. That's why the wealthy have always owned it. That's why, throughout every crisis in human history, gold and silver have been the ultimate form of wealth preservation. Let me tell you a story about what happened in Weimar Germany in the 1920s. Most people know about the hyperinflation, about people carrying wheelbarrows full of cash to buy bread. But here's what they don't teach you in school. The people who owned gold and silver came through that crisis not just intact, but wealthy. While paper money became worthless, while savings were wiped out, while the middle class was destroyed, the people who had converted their wealth into precious metals were able to buy real assets, property, businesses, for pennies on the dollar. The same thing happened in Argentina, in Venezuela, in Zimbabwe. In every hyperinflationary crisis in modern history, the pattern is the same. Paper money fails, real assets survive. Now, I'm not saying we're headed for Weimar-style hyperinflation tomorrow, but I am saying that the conditions that lead to currency crises are building. The debt levels are unsustainable, the money printing is accelerating, the trust in institutions is eroding, and the people who understand history are taking action. Here's something that should concern you. The disconnect between paper gold and physical gold is widening. What do I mean by that? In the futures markets, on the COMEX, massive amounts of gold trade every single day. But it's not real gold, it's contracts. It's promises to deliver gold, and the ratio of paper gold to physical gold is somewhere around 100:1, maybe higher. That means for every ounce of physical gold that actually exists, there are 100 paper claims on that gold. Think about what happens when people start demanding physical delivery. Think about what happens when the music stops and everyone realizes there aren't enough chairs. That's not a hypothetical. That's a mathematical certainty. The only question is when. And when it happens, when the paper gold market breaks, when the COMEX defaults or suspends delivery or changes the rules, the price of physical gold is going to gap up so fast that you won't be able to react. One day, gold will be $3,400. The next day, it might be $5,000 or $7,000, with no way to get in between. The same dynamic exists in silver, but it's even more extreme. The paper-to-physical ratio in silver is even higher. The supply constraints are even tighter. The industrial demand is even more critical. When the silver market breaks, and it will break, the move is going to make 2011 look like a warm-up. I want you to imagine something for a moment. Imagine it's 2 years from now. Gold is trading at $6,000 an ounce. Silver is at $150. Your neighbor who ignored you when you tried to explain this is now panicking, trying to find any way to get exposure to precious metals. The premiums on physical metal are 50% over spot. The wait times for delivery are measured in months, not days. And you're sitting there, calm, protected, because you took action when it was still easy. When you could still buy at reasonable prices, when physical metal was still available. That's the choice you're facing right now. Not whether gold and silver are going higher. They are. The question is whether you're going to position yourself before the crowd figures it out, or after. Let me share one more thing, because I think this is crucial. A lot of people look at their portfolio and think, I can't afford to buy gold and silver. I need my money in investments that generate returns. And I understand that thinking. But it's based on a flawed premise. The premise is that your stocks and bonds are safe, that your 401k is protected, that the system is stable. But what if it's not? What if the next crisis makes 2008 look like a minor correction? What if the currency crisis that's been building for decades finally arrives? In that scenario, having 100% of your wealth in paper assets isn't diversification. It's concentration. It's putting all your eggs in one basket and hoping that basket doesn't have a hole in it. Gold and silver aren't just investments. They're insurance. They're the fire extinguisher you hope you never need, but are grateful to have when the house is burning down. And right now, smoke is starting to fill the room. The smart money isn't waiting to see if there's a fire. They're already heading for the exits. They're already converting paper wealth into real assets. They're already stacking. And every day you wait is a day that metal becomes more expensive, more scarce, more difficult to acquire. Every day you wait is a day closer to the moment when everyone figures this out at the same time. I've been studying markets for a long time. I've seen bubbles, I've seen manias, I've seen irrational exuberance. And I can tell you with absolute certainty, this isn't that. This isn't retail investors piling into something they don't understand. This is institutions, central banks, sovereign wealth funds, the people who have access to information you and I will never see, systematically accumulating precious metals. They know something, and they're acting on it. The question is, are you going to act too? Or are you going to wait until it's too late? Until the easy money has been made, until physical metal is impossible to find at any reasonable price? Because here's the brutal truth. There's a limited amount of gold and silver in the world. There's a limited amount available for purchase. And when the rush starts, when the general public finally wakes up to what's happening, there won't be enough to go around. The people who positioned themselves early will be protected. The people who waited will be left scrambling, paying whatever price they have to pay, if they can find metal at all. I'm not trying to scare you. I'm trying to wake you up. Because the opportunity that exists right now, the chance to protect your wealth and potentially multiply it, doesn't come around often. Maybe once in a generation, maybe once in a lifetime. And it's happening right now, today, while you're listening to this. The institutions are buying. The central banks are buying. The smart money is buying. The only question is, are you? Don't let another day pass without taking action. Don't let another week go by while you think about it or do more research. The research is done. The data is clear. The trend is established. All that's left is the decision. Stack now, while you still can. Stack consistently. Stack strategically. Because the day is coming, sooner than most people think, when you'll look back at today's prices and wish you had backed up the truck. The choice is yours. But the clock is ticking, and every tick is another ounce that's gone, another opportunity that's passed, another day closer to the moment when everyone realizes what you already know. Don't let that day come and find you unprepared. Protect yourself. Protect your family. Protect your future. Stack now. Stack hard. And don't look back.